All right, party people, a twofer today. A twofer. Oh, I think I need to turn a light down. Whoa, Nelly. All right, so stocks, mortgage rates, real estate. What's going on right now? Financial world. This huge divide has been created with COVID. You're seeing certain businesses flourish right now, certain people having records. I mean, we saw it today. Apple, Amazon, what was the other company that reported huge wins? Facebook was up 11% revenue. Certain companies, certain businesses thriving in this environment, others completely decimated and crushed. Imagine you're a restaurateur. Imagine you put your heart and soul into a restaurant. You're screwed. So there's certain things going on here. Let's get the disclaimers out of the way. This is Derrick Evans. My NMLS number is 155010. I am a VA home loan specialist. Okay, that's my phone number if you want to call or text me if you have questions. So here is what's happening. We're going to go through this. I'm just going to show you a few things because first we're going to start in stocks. It all begins here. Today we had the worst ever GDP quarter to quarter ever. So we had literally the worst. And the GDP, remember, is like, this is like the number that tells you how the country is doing economically, okay? That's what the GDP is. Today was the worst that we've ever seen from a quarter to quarter difference. Now, what's crazy is if you go and you look on CNBC.com right now, you can look on the entire first page and you don't even see it. It doesn't even say it anywhere. How bad this number was. All it talks about is Apple doing a 4-for-1 split. Listen, the stock market should have been completely murdered today. And it started off looking like that's what was going to happen. So we gapped down, right? We started lower, went lower, violently, quickly. Then plunger team jumps in. I've talked about this. Listen, they're not going to let it go down. They're just not. And it's been very, very clear that that's the case. So you see a little bit of a battle here, then it's like, okay, the trading algorithms realize right here, that's what this move is, that, you know what, path of least resistance is higher. So let's go into our normal formations, let's bounce off of this and head up there. And that's exactly what happened. So we're down 225 on a day where we got some of the craziest, most negative news, and people are going, wait a minute, how is this possible? How could it be that we are seeing stocks do so well amidst so much economic turmoil? Let's keep an eye on one thing. So let's look at this. We're going to look at, this is the intraday chart, right? So we're down 225. It really wasn't that bad. Less than 1% on a day with so much bad news. It's pretty good, actually. For those of you who think I'm being positive on stocks on the day when we're down, I am, because it should be way worse. Way, way worse. But it's not. And so what we're seeing is, here's the fall. This is the coronavirus crushing that took place. Come on now. There it is. This is the coronavirus crushing that took place right here. Since then, we've rebounded very strongly, and now we're in this trading zone. So now we're in this little trading zone right here where you're seeing stocks kind of hang out. But there's a lot of winners and losers. So even though the Dow may be sort of hanging out in this trading range, there's a lot of stocks that are winning big. There's a lot of stocks that are losing big. We've seen some of the airlines, some of the cruise lines. Other certain stocks like Tesla has exploded. What's going on is there's no place to get return on your money. Go and look. If you found $100,000 in your closet today, buried behind the walls, turn it into the police, of course. But if you didn't do that, if you went ahead and decided, well, I need to do something with this, what are you going to do with it? Are you going to put it in the bank where they're paying you a fraction of a percent, a fraction of a fraction of a fraction of a percent for that money? Are you going to buy a money market, which is about the same? Are you going to go buy a bond, a CD, which pays you nothing? I mean, you need to go 30 years to get 1% on a CD. So you have no place to put it. There's two places. Stock market, real estate. That's it. That's it. If you want your money to work for you right now, that's where you got to be. There's just no other option that's paying anything, and there's too much risk involved. You want to invest in this business or that business, good luck with that. You know, I mean, there's so many potential regulations, issues, lawsuits. I mean, my goodness. There's too many variables there to have it make sense. So what happens? People put their money in stocks. And so that's why it's able to hold here. It's able to hold this range, even though really, a lot of people would say, well, it should be lower. The thing is, the stock market doesn't care about the media. The stock market doesn't care about fear, about implied, risk and things like that. Doesn't care. It's really just, the stocks are essentially commodities. Oh, wow. I wonder what that is. Hey, look at this. Home box office in Beverly Hills is calling me right now. Maybe I should take this call. We want you to star in our new film. Oh, sorry, I missed the call. I was doing a mortgage rate update. So this is what's going on in the global stock market. Now, today, so that's the reason why. So for people who've been asking me, like, how can stocks be up like this? Blah, 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 blah. I know you said you're short the market. I'm still short the market as a hedge because my business will do well if the economy does well. If the economy takes a crapper and this falls off a cliff and goes, psh, I want to at least be making money on that, because it'll hurt my business significantly if something like that happens. So it's a hedge. And, hedging is something that you have to do sometimes. This is today. We're up another 16 basis points. Ho-hum, yawn. Only another 16 basis points on the 2% coupon. Folks, what we're seeing here is unprecedented. Another 16 basis points with like 30 basis points yesterday. It's a 2% Fannie Mae coupon right here. We're trading 103.42. Remember, the basis for this is 100. So that means the actual yield on this 2% coupon is much lower than 2%. And that's the reason why you're seeing interest rates get into the 2% range. So now let's take a look. This is my final shot for you. And let's just do a little zoom in here. So this gives you an idea. This is mortgage bonds. This is a daily candlestick chart. So each one of these candles represents one day. So one day, one day, one day, one day, one day. And what we saw here was we saw a pullback from the highs. Okay, we got back up there again, saw a pullback again. By the way, Barry Habib is the one who provides this for us through mbshighway.com. It's an amazing website, subscription-based. And these are his calls to lock. So he said lock here, and he said lock here. Now, I make my own decisions about locking, but as you can see here, we've tested. This is called knocking on the door. All right, so we had this resistance level set up at the all-time highs previously. This is going back several months during Corona time. It was actually when the Fed blew out the hedge that every mortgage company had on their locks and caused all sorts of chaos. That was all caused by the Fed. This is also the Fed. But the difference is this time we knocked on the door, okay, once. We knocked on the door again. And it's typical to pull back after knocking on the door, right? And it's a lot of times, it's the third time when you knock on that door, we knocked on it again here. And guess what? The door opened up. And now we're moving higher. So for a lot of people who've been asking me, like, hey, I've been hearing that mortgage rates could go even lower. And while that's possible, and it is, it's possible, I'd say that it's probably less likely than the opposite. And the reason for that is because without the Fed doing this, we wouldn't be here. If the Fed saw that the natural market was going to run mortgage bonds higher, they'd probably step back quite a bit. And just say, okay, we don't need to purchase $6 or $7 or $8 billion worth a day. We'll take a little time off. We'll save a little bit of this capital in case we really need it. Because if the natural organic market can produce 2% mortgage rates, or just mortgage rates in the twos, let's say, then the Fed doesn't need to be in there. The Fed should only be there as a backstop, to make the recession less bad. That's what they're supposed to do. Seems to me that they care more about growth than they do about preventing bad things. They want to maintain growth. While this is a good thing for your 401k and appears to be a good thing for your mortgage, by the way, refinance. Save the money while it's on the table. Take advantage of it. Whether you call me or call someone else, refinance. Okay, get a good quote. If you're a veteran, if you have a VA loan, I can get you the best deal. If not, you want to shop around, whatever, go for it. But the bottom line is, it's an opportunity to save money. This is a way that the government can effectively do stimulus without having to have anything passed by Congress. The Federal Reserve is deploying unbelievable amounts of money, tens of billions of dollars a week, to mortgage bonds alone. They're also buying other assets now, corporate bonds. Someone said they're going to buy stocks eventually. I'm not convinced that they aren't already. But that said, they're buying mortgage bonds. We do know that for a fact. We do have the numbers. Barry gives it to us every day. So how does that matter? What matters about that is that it means you have an artificial stimulus that's imagine the wind is blowing this way, and so therefore the tree is leaning. If all of a sudden someone comes and starts pushing that tree, let's say someone's pushing the tree over, and then all of a sudden the wind starts blowing, that's the natural organic market, then the person who's pushing that tree doesn't need to push as hard. It doesn't mean that they're going to keep pushing as hard and push the tree even further. It means that they might just let up their grip on that tree they're trying to push over. I don't know why I'm pushing over trees in my examples. The point is this. I think this is the time to get your rate locked in. This is the time to refinance. And this time could last for a while. Rates don't have to, go up or down. They could stay here for quite some time. And that's what I actually think will happen for the next 6 months, at least to the end of the year. Perhaps all of next year as well, we'll see rates in this level. And if that's the case, it'll do wonders for so many things. But essentially, it is a government stimulus that is just not passed by Congress because it is just done sort of almost in a dictatorship style way. This Federal Reserve, which is a board, it's not a dictatorship, there's no dictator, but it is a board with a spokesperson, and they are doing these things to help us. So take advantage of it. You won't believe how rates low are, or how low rates are. If you call your loan officer or call me and ask them, just find out how much money can I save and see if it makes sense. This is something to take advantage of. If you're looking to buy a house and you were pre-approved a few months ago or maybe 6 months ago or whatever, take a look at your pre-approval again. Call your loan officer back and say, hey, I wanted to retake a look at this. How much am I qualified for now with where rates are today? And it does make a difference. We've had people writing offers, all week. And, sometimes they don't realize because we haven't had the time to let them know, hey, rates have gone down, that the rates have dropped 1/4 or 0.5% or whatever it may be. And that makes a difference in their monthly payment. So keep those things in mind as this market is moving. Just know that it's going to be hard for stocks to go down when interest rates are so low. These low interest rates just make stocks too appetizing, and I don't see stocks going down unless there's a real major issue. Because we've already had major issues. There's got to be major issues in the economy. And even if we do, it's just where do you put your money? People are still doing well. Not everybody, but people still are. So I think stocks are a safer bet than they normally would be, which is crazy to say. And I think that what we're seeing right now with mortgage bonds is we are seeing the effects of natural movement higher, natural trend higher because assets are rolling into safety. And the people who are investing in mortgage bonds might be people who are invested in other things, not stocks, but other things previously. Normally we need money to roll out of stocks to come into bonds, but that may not be the case now because so many other asset classes have huge question marks attached to them. So if we can continue to see, mortgage bonds go higher, we will continue to see rates and pricing go lower. As of right now, the lowest coupon rate that you're seeing out there that you can buy your rate down to is 2.25%. And you can get that, I believe, both on conventional and VA for sure you can. In some cases, people may qualify for this without even paying any points, which is just crazy. So, that is the new. Now, will we see 2%? Will that be next? And then will we see 1.75? It's possible. But at a certain point in time, you got to remember the banks are just going to say, we'll take the money. When there's so much demand, people are calling me and telling me that it's going to take 4 months to refinance. Like they're actually being disclosed to from places that they're calling, hey, I'm calling to refinance. Hey, just so you know, it's going to take 4 months. That's our turn time right now. They're being told that. That's nuts. I understand why, but that's the reality of the situation. So when you have that much demand, the banks don't have to give you every piece of gain. They just don't. When rates are this low, they don't. You're going to save money. If you're going from 4-something, I'm refinancing a lot of veterans right now who are in 4-something%, mid-3s or higher on a VA loan, which is a great rate, but it's just not as good as you can get right now. The opportunity to save is here. So I would suggest taking advantage of that. Also, I'm going to make a video tomorrow. If you're sick of getting tons of mail, especially to my veteran friends out there, you're sick of getting all this crazy stuff in the mail about your VA loan, you're sick of getting pre-approved offers, you want to protect your credit and you want to protect your identity, I have the fix for you. I have the solution. I'm going to show you live how to do it exactly tomorrow in tomorrow's video. So hopefully that helps tell you what's going on. Questions about VA home loans, questions about interest rates, give me a shout. I'm happy to answer those. My job is to serve. I want to serve you with the knowledge that I have. Any way I can do that, please let me know and share this with your friends. Let's help make sure that they are smarter than everyone else. See you soon.